Hey guys, Spac Daddy Doug here. Today I'm very excited about this week's video, but I'm also very excited about what week it is. It is the Santa Claus Rally, and historically this is the best week for stock trading of the entire year. 78% of the weeks end up in green and also have the best returns of the entire week of the year. So with that being said, I don't think it's any different. And on Monday morning, we've had a great kickoff to this entire week in the rally. So let's get started. I'm going to go through a few different SPAC stocks that I'm excited about. Also just one SPAC stock that had an announcement this week. I'm not crazy about, but I'm going to bring it to your guys' attention. There are so many SPACs out there. I can't go through them all in one video, so I'm going to do multiple videos this week telling you what I feel and just bringing news to you guys. So first, I'm going to say ticker symbol GIJH. They're merging with United Wholesale Mortgage. I do like this one. They have their merger. They're going to be merging on January 22nd of 2021. So I would expect over the course of a few weeks, the stock will continue to rise until the merger. What they are is they're the number 2 mortgage originator in loans and number 1 in wholesale origination. Their goal is to be the largest mortgage company out there. They do have year-over-year growth. And I was looking at the trend since 2014. They have been growing between 50% and 100%. And in the last year, between 2019 and 2020, they have tripled in size in their loans. A lot of that has to do with the low mortgage rates and different things that are going to be going out there, but they are offering a dividend of 40 cents when the stock goes out there. I think this stock has great potential. It's a conservative buy, and I do think it's going to probably be a growth stock over the course of the next 3 weeks. So if it's something that you're looking to add to your portfolio, go in. And I do like the mortgage industry right now. The next one I'm going to get into, and I do have a video on extreme due diligence on this one, but NGA, and they're merging with a company called Lion. Definitely get into it. And if you've been following my videos, you're probably up about 100% since my first video on this. But they are merging with a company that's doing electric school buses. They're based in Canada. A lot of news is coming out this week about the company itself. They are going to be expanding in the U.S. with a factory and also a battery factory to expand their manufacturing capabilities, which is really throttling them. And with the Joe Biden administration coming out there, they want 500,000 electric school buses on the road. These guys are limited with their capacity, but they are the number 1 player in this field. Definitely do not pass this one. And over the course of the next 4 years, I think their growth is going to be expansive. And I'm saying, no, I'm going to say I'm guessing this, but I wouldn't have put it past that the stock would hit $50 per share following trends of other EV SPACs. And I do think that this potentially might be the number 1 SPAC within the next quarter to follow through. But NGA, definitely look into getting into it if you haven't already. The next one I'm going to talk about is Ultimate Acquisition Corp, merging with Owl Rock Capital and I believe it's called Dillon. I do have an investment into this one, just so you guys know. I'm not crazy about it. I don't think the growth is going to be expansive, but they did announce on the 23rd that they are going to be doing the merge. What they focus on, they're going to be the second largest SPAC with $12.5 billion valuation. They're focusing on 2 different types of alternative investments: direct lending, which is lending without a bank directly to these small and mid-sized companies. They're also doing alternative investments with $23 billion of assets under management there. What they're loaning out money to do investments into smaller businesses. They do have a dividend of 2.7%. What I don't like is just the size that the SPAC ownership gets. They get 2% of all the shares out there. But they do have positive growth, year-over-year growth. So I do think it is a play. I think you probably might have a short-term play this week with ticker symbol ATAC as people do continue to buy into it. I would look at selling towards the end of this week and probably, maybe if you're like the company itself, get into it in a few weeks in the past as soon as it dips down a little bit. The next stock I'm going to talk about is definitely a stock to look into. This is definitely a dark horse out there. Ticker symbol LCYA. And that's if you've been following LCA, that's Tillman Ferretta's next SPAC stock. And he does invest into his own company, so he's going to turn it around. So LCA does have their merger on the 29th of this week. After this, people are going to be dumping their money into LCYA. I am guessing, this is a guess, but I think he's going to take his golden nugget, restaurants and hotels public with this SPAC stock. The SPAC stock is up significantly today on the warrants. They're about $2 per share. I would expect this to continue to rise over the next few weeks. People are guessing, hey, he's as soon as this merger is done, he's going to roll right into the next one, like business like usual. And there's probably a lot of lessons learned from his previous experience with LCA. And I definitely think we have lessons learned. And I definitely would say if you are, if you're not risk averse, this is the stock to get into. Something's going to be announced fairly soon after LCA to get into. And then lastly, I want to talk about GIJH. I have a few videos on due diligence. I'm probably one of the only people that have videos on this one. But Juniper Holdings, they did have their they did announce last week that who they're going to be acquiring, and the company is called Janus. And what they do is they make garage door openers or garage doors for storage units. Not really sexy, but they do have year-over-year growth. Currently at the stock price of $11 and change, and warrants at $2. Between now and when the stock merges in public, I think at the end of Q1, early Q2, I do expect the stock to probably hit $15 to $18 per share. Warrants, I wouldn't put it past that. It goes up to $3, up 30% of where they are. So nothing exciting, not sexy, but definitely a hold if you're a more conservative investor. I think it's a lower risk. Like I said, industrials are never beautiful or never sexy, but it is a long-term hold with some growth. And lastly, I always talk about Pershing Square Tontine Holdings. If you have cash sitting in a bank account that are not using, this is the Spac stock to be in. Over the course of the next quarter, I'd expect an announcement to be made. And like I said, it's going to be the largest Spac deal out there. Don't be afraid to get into it. It's very low risk, high reward. A lot of big people are in there. No one's pulling out any type of money. But definitely should have a good chunk of your investment in there for cash that is not being used. With that said, like and subscribe. I'm going to have videos out this entire week. There's so much to go over. Till then, I'll talk to you guys next time. Bye.